Hello, good afternoon. It's Wednesday. Modern Investing with Sasha and my friends are already here. I immediately introduce you to all of them. First, Shakil Latimer from Australia, Jim from California, USA, and Gwen Pan, also from USA, North Carolina. Hello, everybody. How are you today?
How are you?
Good afternoon.
Okay, remarkable market today. A Salesforce was added yesterday to Dow Jones and immediately went up today. I'm scared to say the number. It's like, what, 25%, probably much more than that, but while we speak. But it's a very, very good company. It's extremely well run, good numbers, but 25% in couple of hours. Yeah, it's scary, is it? It's scary. It's scary. And as we all know, nothing goes up forever. It may go slightly down, so maybe on a pullback to buy. However, in order to accomplish exactly that, I've sold the bullish spread puts, and we'll see. Hopefully, I don't really believe that I will be exercised, so most likely I will just keep premium to buy a few more shorts. And if not, okay, I don't mind to own the stock at much lower prices when it's trading today. But everything is moving up, except one thing. One very interesting thing where I building my position about is there is a certain device by the name symbol is TZA. You already heard from me probably more than once. It's a triple bear Russell 2000. And interestingly enough, with all this just incredible moves on the upside in all the major stocks, guess what? TZA is up also. So the Russell 2000 is not doing that well. How come? It's what we discussed, the decoupling of major stocks like Microsoft and Google and Apple and all others, and 2,000 smaller stocks, much smaller stocks, which represents TZA or Russell 2000. And please bring everybody in. I'd like to have new faces if possible. Okay, now we have hello, how are you?
I'm fine, Sasha. How are you?
Good. Doing very well, discussing just what's going on in the market and possible ways to make some money. You're offering us possibility to save money in order, so all the money that we will save thanks to you will go into investments and make even more money with investments today. So that's basically outlook on the market. I don't want to go into details, except I would like to mention one peculiar thing that first of all, what I mentioned earlier today is that Dow Jones, which get rid of companies like Exxon, which a few years ago it was the largest company in the world. It's no longer in Dow Jones, but I'll tell you that Dow Jones doesn't represent really much today. It's a 30 stocks. It's just very well known among all the investment audience, mostly amateurs. who are talking about the markets, they mostly talk about Dow Jones. But today, S&P 500 is much more representative index than Dow Jones, and especially that when you have such garbage companies in Dow Jones like Walgreens, Boots, then there is nothing really to talk about. I don't want to waste anybody's time discussing Dow Jones. It's not valid anymore. S&P 500 is. Russell 2000 is, and I think we will hear more about that in the near future. And what I'd like to mention is that we have to be, while bullish on certain stocks like, of course, Apple, Microsoft, and others, we have to be very careful about one particular fact, that retail investors, they're now moving into the market a big time. And that normally occurs near the top of the market. So the most likely it will lead us to roughly 15, maybe even 20% correction, which will probably materialize in early to mid fall. Of course, it could be a second wave of coronavirus, uncertainty about the outcome of presidential elections, slower than expected economic growth, possible deterioration in corporate profits, extremely high valuations in certain areas of the market, as well as other variables. And now I would like to our guest. So, hello, Bill. How are you doing today? Great to have you over. I'd like Shaquille. What would you address based on my observations?
Well, there's a number of things, and please, for the viewers, if you can hear beeping, please forgive me. That's my my trading system going off and doing stuff. So it is the middle of the trading day, so forgive me for that. Very interesting to see Salesforce. I think I've got these books here from Jim Aid. Jim, you need to do me a favor and please write a book, Investing in Tech for Dummies, because I have absolutely no idea. I remember when Salesforce first came out, I was actually working for a company that had a call center, and you know, they were very interested in CRM and that sort of stuff. And I remember when I first heard of Salesforce and thought, this is just rubbish. Like, why would anybody buy this? And yeah, I guess I was wrong again, just like I was with Amazon, just like I was with Google. Google, when they first came out, I thought, yeah, who cares? Alta Vista is much better. I can't remember the last time. Does Alta Vista even exist anymore? I have no idea. So to hear that Salesforce has gone onto the Dow Jones is shocking enough. But to hear that they've gone onto the Dow Jones and ExxonMobil has gone off the Dow Jones, I think I'm in an alternate reality. I've never actually, if you'd have told me this, not even 10 years ago, if you'd have told me this 2 years ago, I would say, I think you need to go to Bellevue. Is Bellevue in California or is it in New York? I'm not sure. But wherever it is, that's where I think you need to be, because there's no chance that Salesforce will go on the Dow Jones and ExxonMobil will come off. But sure enough, that's what's happened. GE came off, again, something that you'd never think would ever happen. So yeah, it's a strange market that we're operating in. But also, you mentioned Microsoft. Look, I was in Microsoft around 6 or 7 years ago, and unfortunately, for personal reasons, I needed the money at the time, and I sold out. But you know, I picked up the stock at like something like $41 a share or $44 a share or something. Got out at 60, and to see it now at 215, it's just incredible. Especially considering it's up almost 60% for this year to date. So that's a huge increase. I think that it's a strange market. Going into the election season, that gives us some very interesting things to look at from an international perspective. So internationally, I think Australians are quite frustrated with our own politics domestically. From the time that I was 0 to 18 years of age, we had 3 prime ministers. We've had 7 changes of prime ministers from the time I was 18 to today, where I'm 36. So I think Australians are a little bit jaded with politics, and we tend to pay a little bit more attention to policy. From what we see on our media, we haven't seen an awful lot of policy coming from the Democrats, but I was actually expecting there to be a lot of policy things happening at the RNC, and there hasn't really been very much in relation to policies coming out of the RNC so far that I've observed from here in Australia. What does that mean as an international investor? It means I'm looking at the market going, one, how do I pick who's going to win? But two, what do I think the market reaction is going to be to who wins? And that's very difficult to assess, and that's amplified because of COVID. So that makes it a little tough. The other thing, and I say this quite cautiously because I have an American audience and an American panel, except for you, Sasha, is I don't know really what the Fed is going to do, because the Fed is pumping a lot of money to boost the economy, but what it's doing is it's boosting the stock market. And as Jim has said many times, and a few other people on our Economics Monday show have said very many times, the economy is not the market. The market is one part of the economy, but the economy is wider than that. It's broader than that. However, from an international perspective, we're looking at what's going on in the stock market if we're investing. And the problem with having the Fed push a lot of money into the market, support the market, make the market more buoyant, make interest rates, go down to record lows. The effect of that is that if I'm sitting here in Australia and I'm buying shares in a company in the US, or I'm buying shares of the entire index in the US, and there's a profit to be made, that profit, we have tax treaties. Most Western countries have tax treaties with the US. So I'm making that profit. That profit is partially because of the Fed. US people aren't getting any benefit from that, but US taxpayers are eventually going to be footing the bill. So that's an interesting dynamic. And the Fed kind of has to do that to make sure that international money is still attracted to the US. But long term, it's a little unfair on American taxpayers. Now, not that I'm going to complain because I'm not a US taxpayer, but it's a little unfair on US taxpayers if they're essentially giving me a subsidy on my purchases of US stock. And I can tell you, if my country was doing that to any great extent, I'd be pretty annoyed right now. So it's a very, very interesting dynamic that we're seeing happening. And what I'd be very interested to see is how the ECB reacts with the EU markets, which are also, there's a lot of opportunities there. Of course, there's going to be a lot of opportunities. Brexit's about to happen, like officially, like it's all over on January the 1st. So it's going to be very interesting to see how these different markets interact with each other and the comparative differences between the two. And we haven't even touched on Asia and some of the other markets that are major around the world.
Well, I agree with you, and Canadian point of view is very similar. Canada is not really pumping money in propping up the companies and making them even more profitable. Canada most likely spends money to help actually people who are in need, who lost their jobs, or small businesses and so on. So in that situation, see what's happened in America. All the pumping of the money in the stock market is what I call saving private Donald operation, and I think it will go on probably until the election, and then regardless who will win, if Trump will win, there is no point to support market anymore because Trump is there for another 4 years. And if Biden wins, and even more so, the money will stop being supplied to pumping the stock market further. Most likely it will have a setback. However, I'd like to know, Bill, please, how you see the correlation between what's happening now in the stock market and internal U.S. politics?
Well, I think currently right now we are in our economy's in a Trump-induced coma for two reasons. First, with regard to small businesses, they can't do anything because of the COVID pandemic, and they're in a cycle of start, stop, and so that's a great deal of uncertainty. And so that, I think, is rippling through our economy. And then when you deal with large corporations, they can't plan because they don't know what the policies are moving forward. And as Shaquille pointed out, the Fed is pumping in a great deal of money into the economy, and we won't know what the effects are. And we don't know, at least until November 3rd, which direction the country's going to go, both with its fiscal policy and its monetary policy. And if I might, just as an observation on that, right now we are in a phase where we're experiencing an expansionary monetary policy with the Fed pumping in all kinds of money and providing liquidity both to the market and the economy. The question is going to be on the fiscal side when it comes to the governmental policies, whether it's Trump or Biden. And from what I've seen, and I just want to give a nod to the IMF, what they did was they said they refinanced about 72 countries this past year to get to provide stability. But the countries that they were serving, they put them on a two-part plan: a monetary policy as well as a sustained fiscal stimulus program, because it can't just be short-term. It has to be something that goes into infrastructure that's for a period of time. Now, that's what the IMF was doing. Now, when it comes to the United States, and this is the problem, I suspect, for Shaquille and a number of the other investors, and you as well, and Jim, and that's this, that you won't know, because when we come to the United States, if we may have to apply that model: sustained expansionary monetary policy to provide liquidity into the market and into the economy, but then a sustained fiscal package. Now, the challenge on the sustained fiscal package is going to be the political will, because a sustained fiscal package is going to obviously affect the debt and the deficit. And there may not be a political will to put that kind of money. And when I talk about an expansionary fiscal policy, at this point, some of the commentators and some of the reports have suggested it might be on the level of expansion that we last saw under the policies of FDR. It might be that significant in order to stabilize our economy. And there may not be the political will. However, and here's the kicker, because it's a chicken and egg story, we have to stabilize the American economy, because the rest of the world economies won't be able to stabilize themselves. Now, the question for us is whether or not we are going to have the political will for sustained fiscal stimulus, and whether or not we can, the next president will commit to that. So it is uncertain. You know, they use the term VUCA, volatile, uncertain, chaotic situation. And for at least during this election period, the next couple of weeks, we are in that position. And that's kind of how I see it. So we're a bit of a handicap. So, and Shaquille, what do investors do? And Sasha, what do investors do when they're faced with such uncertainty that you just really won't know until November, or whenever the election is concluded?
Please, Shaquille, elaborate.
Well, look, what I'll say is I'm going to be a little bit cliche on this one, okay? Generally speaking, in any country, not just the United States, in any country, if you separate the places, you know, the politics into left, right, and I don't think it's as clear as that, but let's just, for the sake of this example, separate it to left, right. What people will generally do, what the market generally tends to do, is it assumes that the left is going to shore up social issues. It will, you know, spend more money on, you know, welfare and you know, healthcare and education, all those sorts of things. And the right's going to cut regulations, and it's going to cut taxes and that sort of stuff. So the right's going to have a buoyant effect on the market. Now, if you look at the 2016 election, it was pretty certain that Hillary Clinton was going to win. I mean, I think almost everybody, including Donald Trump, thought that Hillary Clinton was going to win that election. And just to use this as just one example, when you saw Donald Trump sort of looking like he might win, and then it looked like, oh, maybe he won't, oh, no, maybe he will. If you looked at the US dollar versus the Mexican peso, just as an example, you actually saw you saw it sort of just flying up, down, and like all over the place. And if you actually expanded out the chart, instead of it just being for that one night, you saw the kind of movements that you'd expect to see in a 1 year chart. Like if you took that one day chart or that 2 day chart, it had the same kind of volatility and the same sorts of movements that you would expect to see over a year chart. If you showed that to somebody and said, how long was this chart over? What was the time period? You'd expect that to be a much longer time period. So that's ordinarily, I think, how the market views things. Whereas we look at it today, it's a lot harder to tell, because both the Democrats and the Republicans they're both kind of in the same situation. No matter who wins the election, what are they going to do about the current situation? Like we've got COVID going on, plus we have a heap of economic hardship happening for the everyday person in America. I'm aware at the moment that you've got some issues with housing evictions. There was a moratorium on that, and that may be ending soon. So, all those sorts of things are difficult to assess. And of course, as a foreigner from quite a far distance away from the United States, there's things that we're seeing that just don't make sense. So you're seeing the property market going up. You're seeing lumber prices at all-time highs, which implies that renovations and house building is going up and the real estate market's going up. But you're about to have these mass evictions. That doesn't make any sense, from a rational perspective. So it's very, very hard to really assess that. The other thing I'll say, and hopefully David K. Johnson's not watching right now, Milton Friedman, my favorite economist, he was a monetarist, and what the Fed is doing at the moment is really monetarist theory. It's increasing the money supply, which is one of his criticisms after the Great Depression. He always said that this was the fault of the Fed, and what the Fed should have done was increase the money supply. Right. Ben Bernanke actually said while he was in charge of the Fed, he actually said Milton Friedman was right. This was the fault of the Fed. So fiscal intervention by FDR absolutely had a lot to do with the US coming out of that. However, now we're applying a more monetarist theory, and I am saying things that please, can we stop the recording, make sure nobody hears me saying this, but are we better off going to a new Keynesian view of economic theory? Do we need to start looking at fiscal intervention? And if so, what does that look like, given that we've already had fiscal intervention in 2008, as well as monetarist theory? Or does it take a new Nobel Prize-winning economist to actually come up with something different? Maybe we're in a different world. Times have changed. We're going to need to do something different now to the couple of old theories that we have.
Mm-hmm. Very, very well said. Jim, would you like to offer us your view on what's happened to the market and economy?
Yes, Sasha, I would like that. Thank you for asking. But I would like to ask you a question first. And what is the first rule of investing?
The first rule is preservation of capital. Same as second rule and the third rule as well.
Right. So we're talking about preserving our capital.
Yes.
In other words, not losing it. And I would like to say a couple of things. Like if we adopt Keynesian philosophy, which Nixon said he was now a Keynesian believer, and that was 50 years ago, and that put Nixon 50 years behind the times. So that's a 100-year-old economic theory that we don't need. And I have the same criticism of Milton Friedman, but I also admire him greatly. But what we need is the new economic Nobel Prize winner, because nothing that I learned in economics theory is applicable today. It's a brand new world.
Right.
All the old rules are out. And what we have, and you never get rich by overestimating the intelligence of the US people. And it's one of the things that, first off, they think the economy is reflected by the Dow. Of course not. It is not. So, and they think that the Trump policies are keeping the Dow at newer and newer levels. Excuse me. And of course not. It's the Fed. All the credit for that should go to the Fed. So we're wrong in thinking that the Dow is reflecting the economy. We're wrong in thinking that policy is affecting, the administration's policy is affecting the Dow. It's really the thanks to the Fed and their intervention that the Dow keeps going up. But I really think that you've nailed it, Sasha, when you talk about how just certain giant companies are getting even bigger. And the smaller companies are starting to take it in the shorts. And Exxon leaving the Dow and being replaced by Salesforce, I'm staggered by that too. It just doesn't seem rational. And that's actually the truth. The market is not rational right now. And so if you're a rational investor, you don't know what to do. And when we have a climate of uncertainty, which we clearly do, all bets are off. So as you said, Sasha, before, it's a trader's market. and it's not something that you can predict based on old economic theories.
Well said, Jim. And Lynn, please give us your view on the economy and market and election and everything else.
Oh, you're muted, Lynn.
So it's sort of interesting because as I've told on some of the other shows, I really had no finance background. My first job was in finance. And I learned a lot of finance really in the School of Hard Knocks. But I've always invested myself in my own companies, and I really don't pay attention to the market, Sasha. So because I don't believe if you have a good business that the market has a ton of effect. I mean, it depends upon your product, of course, but I don't think the market, what's happening with the markets and what the Fed is doing is necessarily having any major effect, at least on the businesses that I'm involved in. I like to create residual income and income that I can have, for the rest of my life, and based upon businesses I invest in, which really are not affected by the Dow or by the the Standard & Poor's 500 or by any of the indexes. And I really, even during 2008 and when we had the crash, I had a business that frankly would have, but for other reasons, survived regardless of what happened during that period of time. When the market was crashing, people were going into foreclosure with their homes because I sort of look, I get very microscopic, if you will, versus macroscopic. And that's the way I sort of look at the world. I just have always looked at it from the perspective of, will the businesses I get involved in survive pretty much wherever the economy is going?
Very well said. Thank you, Lynn. And thanks to your business models that you are insulated from all these calamities of the market. However, not too many people are as fortunate as you are. For example, there are a lot of mom and pop businesses, small stores. Let's say a company like Costco, Walmart, or others are moving in. And all the stores that were there for the last 25, 50 or more years, they have no choices to close their doors, not even because of the coronavirus. It just accelerated everything. Well, they would probably close anyway in a year or two. But now they're just forced to close, and there is no remedy even to think of, because all these big stores, they're supplying superior products at high quality, at lower prices, more conveniences. So you can't even offer this mom and pop shops even there is no place to hide really, and that's an unfortunate situation, of course. Now, Gwen, please give us your outlook on investing and the economy, the way you see it as a youngest here on the panel.
Yeah, so I guess I'm the youngest in terms of investing here in the panel, but mainly I'm curious about, if the market is so volatile and upwards and downwards and all over the place, how does somebody of you guys' experience share that to people without that experience? Because then the background that you normally see during all the history doesn't seem to be happening right now, and it's all over the place. So Sasha teaches us to preserve capital, but there's no clear way to preserve capital. So Lynn just mentioned something about the small stores being in place. So sure, they'll be in place for a little bit. On the back end of that, my analysis for a lot of those businesses, they're taking a dive of several $1,000s a month. Every month this goes on. There's a business I know of, they're a restaurant. I estimated that they paid $8,000 in rent for that restaurant. Oh, I underestimated. When I talked to the owner, they pay $12,000 a month for that place, and it's been 3 months. And so, if you look at that, think the government subsidized the loans for about $40K 40K just kept their lights open. Now all of it is gone. So now they're going back and doing the thing which their revenue is not even close to being able to pay for rent. So they'll die faster than even what Sasha's thinking. What's next?
Okay, let me address that. Okay, go ahead.
Thing scenario.
Go ahead.
Sorry, I don't mean to. Sorry, Sasha. Go for
Yeah,
it.
okay. One of the reasons that I started this program is I believe that in next few years, probably sooner than I think, majority of people in US will simply have no jobs, no openings. There will be tons of people who will receive their diploma, high school diploma, they will have their degrees from university and whatever else. Other than flipping hamburgers, even those jobs will be very rare because you know that the fast food business is not the best thing to be. So they will have to somehow sustain themselves. People in their 40s and 50s, they will be living with their parents with no income and no possibilities. And what I'm trying to help people, not everybody will be able to do that because of their aptitude, because of their predisposition, their maybe religious motives. I don't know really, whatever it might be. So they will be simply lying on their couch and thinking what mom will cook for dinner. So the only way to escape that horrible existence will be learn. A hard way, probably, maybe not so hard way if you will listen to me, how to trade the market. Now, investing is something different. Something investing what we learn from Warren Buffett, that you buy a quality stock like Coca-Cola and you hold it for 700 years and you will collect some dividends and then stock will appreciate the price. But that strategy is dead. Look at the Coca-Cola stock. It's dead. So if you want to read advices of Warren Buffett, and it's entertaining for you and it's well written and there are some funny stories, please do so. But it's not going to help you, unfortunately. So you have to understand how today's market works. About preservation of capital, what I'm doing, except if it's a dividend stock, like I mentioned several times, and I will not get tired of it, the Altria paying 8% dividend, for example, yes, you can own that stock or go even to Gabelli Investment and Income Fund, which is also paying 8% dividend. However, there are no options. That's one drawback. So if you are lazy, just go to Gabelli and just, I think it's marginable, so you can acquire a few thousand shares and just collect dividends. Altria, I prefer that one because you can sell calls from time to time and collect additional income. On the other way, all you have to do is spreads, bullish spreads or bearish spreads. You don't invest into these stocks, even this wonderful stocks like Microsoft or Apple or others. I don't invest in them. I'm just doing spreads, collecting the premium, and that makes for good, wonderful returns. And also, I'm building up position in TZA by selling puts, collecting premiums, but as well waiting. Maybe, just maybe, I will be exercised. I will go for it because in case of substantial market correction, TZA will fly through the roof. That happened in March when it's from around $25 and went to 100, well over $100 per unit. So that offers you. So if you're willing to slowly understand how it all works, that could be very, very helpful to you. Gwen, did that answer your question partially?
Yeah, of course.
Okay, Shakil, you any comments?
Yeah, I just wanted to say, so we have a company here in Australia called Treasury Wine Estates, and I'm quite a fan of that company actually. They own most of Australia's best wineries, and their share price, I haven't looked at it today, but as of last week, their share price had actually dropped by about 25%. And a lot of the reports that were coming out was that they dropped by that much because China had put a tariff on Australian exports. They put a tariff on our wine, they put a tariff on our meat, and they put a tariff on a number of other of our exports. But something very interesting had actually happened when you actually looked at the auction markets in wine, which was that there was a lot of wine bottles that are quite rare that were being sold at actually quite cheap prices. And I was scratching my head trying to work out why this was happening. So I rang my wine broker and I said, hey, like what is happening? Why are these wine prices so cheap? And what was happening was a lot of these restaurants in Sydney, and I'm talking about like in Sydney City where the rents are very, very high, as you were saying, Ewan, a lot of these restaurants were having to sell something to try and keep money coming in so that they could pay their rent. And if you can't sell food, what else have you got left? If you happen to have a great wine cellar and you're a Michelin starred, our equivalent of a Michelin starred restaurant, you've probably got quite a good cellar. And so they were actually selling a lot of wine just to try and bring money in. And that's an interesting situation. But the other thing that I'll say, which you touched on there, Sasha, which was about jobs. It's one thing for just the everyday person, the adults trying to find a job. But I feel very, very concerned, not just in your country, but in my own as well. I feel very, very concerned about the displacement of workers and what we do with the kids that are actually graduating out of high school today. Or the kids, or I shouldn't call them kids, but the young adults who are graduating out of college or universities today. Because they're going into a work environment or an employment environment where they're having to compete with somebody who's had a lot more experience. I mean, when I first started, as a stockbroker or a securities dealer, I was 18 years old, and it was actually relatively easy for me to get the job. I just had to keep ringing around, hassling a few people until I could get an interview and tell them, look, I'm really clever and I'm fantastic. And I was given the job. And, other jobs that I've had, it was never difficult. I could just apply for a few and eventually I'd get one. I wouldn't have to apply for that many. But if your kids in America are just graduating high school at the moment, our school year runs calendar year, so our kids will graduate in December. What are they going to do? If you've just finished our last year of high school is year 12, if you've just finished year 12 and you're looking for just that service job, you're looking for the job at McDonald's or you're looking for the job at the restaurant, that sort of thing, those jobs aren't there. And if they are, if I'm an employer, who am I going to employ? The 17, 18-year-old kid who I'm going to have to train, or somebody who's worked in a restaurant for 30 years, was the head maitre d', who's got all that experience, and I can employ them for minimum wage. That's probably what I'm going to do. So it's a difficult situation, and I do get very concerned about the longer term effects here, because we're not talking about just something that's going to happen for a few months. We're going to talk about not a generation, but probably an age group of 2 or 3 years that are going to have a whole heap of problems trying to find employment post secondary education, or if they go on to tertiary education, post tertiary education if they're graduating at the moment. So that's a really, really big concern.
Very, very interesting. Bill, I'd like to ask you a question.
Mm-hmm.
You remember the last recession, 2008, 2009.
Yes.
There was a huge calamity started with the real estate, but it didn't spare anybody. All economy went in a comatose situation, and not only in US, all over the world.
That's right.
And do you remember what a colossal effort on the US and other Western countries and Japan were to work together to establish the monetary environment where the country could wrestle this horrible crisis and get out of it? Do you think that if the same collaboration between all governments today with the coronavirus issue would happen, it would be way so much easier economically to repair the damage that has been done lately?
I absolutely agree with you, Sasha. Quite frankly, because it is a global pandemic and it does not have borders, we can't be bound, at least looking at it from an economic standpoint, we can't be bound by um, our borders. We have to look at it as a singular global problem. And that means we have to get the cooperation, at least of those countries that are willing. I think, we'll just call it the coalition of the willing economically, who can get together and coordinate their monetary policy to begin to stabilize at least the larger economies. I suspect right now the uncertainty, though, is that with the current administration, because it doesn't seem that the current administration, meaning the Trump administration, has any notion or idea or feeling towards cooperating with other countries in that kind of solution. But you're absolutely right, Sasha. That would be the easiest and simplest way. However, and Sasha, you can speak to this because I'd like to hear your input. Given the past 3.5 years of the current administration, I'm not sure if the central banks across Europe and the other countries trust the United States anymore. And I'm not sure that the United States is in a position where they can lead the effort to coordinate economic policy and smooth out some of these trade wars and differences. But Sasha, what do you think about that? Because I don't necessarily think that the United States is in that leadership position anymore.
Yes, Bill, I agree with your statement is that very few countries, if any, maybe North Korea or maybe a couple of others, can trust US and work together to find out the situation. A lot of countries, even like Canada, which is the biggest, probably the only real neighbor of the United States, and which have economy very similar to the United States. Look, they're just quite recently, they finished this North America trade deal between Mexico, United States, and Canada. So everything is done, negotiated, agreed upon. And all of a sudden, a couple of weeks ago, US slumped Canada with aluminum tariffs. And
Right.
this situation is, I don't know, maybe it's important issue. Maybe Canada's a policy on aluminum trade is not 100% fair. I'm not an expert on that subject. But the timing is absolutely horrible. There is 2 months before US election anyway left. And now with the pandemic and economic or several other issues at play, all of a sudden to do this, it's very counterproductive. And so European powers, anyway, from Germany to France to England, they're all also quite critical on US leadership these days. And I agree with you that I don't know who is there left to trust US to become a leader on solving all these basically international problems. And the Trump's policy, America first, is also a little bit out of place in today's environment, I think.
Well, Sasha, I have another question, and that is this: that given what you've just said, and understanding that there's a vacuum in leadership, now, is there an opportunity for China to step in and fill that void? Shakir, Sasha, Jim, Lynn?
I'll just add, Shakil, just one thing. I think that China has its own credibility issues. I don't think that China can lead. China, at the best, can participate in some kind of a world's effort, but to lead, I'm quite skeptical on that. Shakil, please.
Yeah, can I just say though, Canada sits, generally speaking, a little bit left of centre. Australia sits a little bit right of centre. The UK, I can't really comment on. Most of Europe is a bit of a mixture. Switzerland's a little bit right of centre. So when it comes to when you're talking about a lack of leadership or a vacuum of leadership, that may be how it appears to Americans and even more so to Canadians. But other people in the world don't necessarily view it that way. And a lot of the things that are talked about when we talk about politics in the US a lot of the things I talked about are social issues that some of us can't relate to because we don't know. Like, for example, when you guys talk about reparations and that sort of stuff, that's just not a debate that's going to happen in Australia because we never had slavery. It never happened here. So it's hard for us to kind of work that out. And because of that, we don't pay a lot of attention to those social issues. And so because of that, we don't necessarily feel that there's a vacuum of leadership. What we look at is who is your leader and what is your leader doing? What is your leader's political views? What's your leader's economic views? That sort of stuff. Something that's been forgotten about because of COVID, I think, was the huge animosity that there was between Donald Trump and Jerome Powell over Fed policy and over the Fed increasing interest rates last year, coming into this. So we don't necessarily, international investors don't necessarily look at it as being a vacuum. If I was going to be concerned about a region, and I used to say this quite a lot a few years ago prior to Brexit, if I was going to look at something that would perhaps usurp the United States dollar as being the world's reserve currency, I would have thought the euro would make more sense, because if you look at the European Union, it's got double your population. It's 700 million people, less than 60 million that have left in the UK, but it's got 700 million people. It's a diverse economy. There's diverse cultures, and they generally get along relatively well, although there's some arguments between the EU Parliament and the EU Commission. They tend to get along pretty well. It's relatively stable. So you would think, especially before they went negative on their interest rates, you would think the EU or the euro would have some stability in it, which would perhaps displace the US dollar. What's been very interesting, though, with the US being the world's reserve currency, is that certain countries have actually decided to cross their currencies directly without having to go back to the US. And so China and Russia, for example, are now crossing their currencies directly. The other major thing that becomes a problem, and it's something that a lot of people may not know about, I'm sure a lot of our viewers may not know about, is that when you transact in US dollars, you are actually subject in some way to US jurisdiction. So if I'm in a country, and I'm not in one, but if I happen to be in a country that wants to trade with Iran, I can do that under my country's rules. But if I try to do that transaction utilizing US dollars, that's going to cause me to potentially be in trouble in the United States. And in the US, I can be arrested, or an arrest warrant could be issued for me, even if I'm not a US citizen and even if I've never been to America. So that could be problematic, because I could find my company being sanctioned. If I'm a bank or an oil company or whatever, I could find my company being sanctioned for having done a deal in Iran, and that sanction would exist because I used US dollars. So when the US, for lack of better words, oversteps the mark into international trade, that can cause some countries and some companies to say, we're not going to use the US dollar, and that weakens the US dollar's position as the world's reserve currency. I think that that is probably a greater problem than the world looking at your country and saying there's a lack of leadership, because whether there's good or bad leadership, if we think the market's going to go up under the leadership that's there, we'll trade the market to go up. If we think the market's going to go down because of the leadership that's there, we're going to trade the market to go down. For economic reasons, we don't really care what's going to happen. I care because I like the United States and I love the people that are there. But from a purely economics perspective, why would we care who can charge?
Shaquille, I may respond. It's an old saying that there is no stock market. It's a market of stocks. And if that's correct, there are absolutely separate universe between top stocks such as Apple and Netflix, which went today up almost 10%, or no, it's over 10% up today, and Google and Amazon, whatever, and all other stocks. Okay, so when we're saying that the stocks are going up, we're talking primarily about 6 stocks. Russell 2000 in a day like today hey, guess what? It's not going up, it's going down, right? So 2,000 stocks of the Russell 2000 all going down, probably majority of them, at least index is down today. And the six stocks are up 10%, some cases more, like Salesforce, for example. Okay, that's number one. Number two is that, as we discussed earlier, no country on its own in the world today, even US, can dictate any substantial political, economical, or any other policies. It's just impossible. So all premises of Trump that he is talking about for the last almost 4 years, the America first, it's
Yeah.
enough. It just cannot work. There is no proof that it could work even after Depression, before Second World War. So finally, Second World War broke that position of US at the time, America first. Today, in the age of globalization, it's not trying to be nice and polite. It's not sustainable. Let's put it this way. Bill, what would you like to add?
I just, I just, I just want to add this question and your thoughts on it. When Trump announced the America First platform and began to pull out of our international treaties and then scoffed at the Pacific Treaty, it seems to me that other countries began to say, realize, well, we can't trust the United States. And then they started to make their own deals and act independently and somewhat adopt, their nation first. And it seems to me that that damage is now already baked in to the system, which might be a cancer on the globalization. And what you're talking about is the need to repair the relationships, most importantly, the trade relationships and the economies globally. And I'm not sure in how we do that, given the damage of the America First economic policies.
Well, I must add, absolutely, in today's theme of conversation is the fact that certain countries like Russia, China, to of course, and few other countries, they're now trying to destabilize U.S. dollar, and low interest rate in U.S. help to do that. So in a case like you, Shaquille, indicated, for example, if you want to trade and buy something from Iran or sell something from Iran, and if you do it in US dollars, you can become be under sanction of US government. But what's happened if you will settle that trade in euros or Australian dollars or even let's see, Russian rubles, for example, if Iran would agree to that, and its advantages to you. So this is just one of many examples where U.S. could weaken its currency as last resort. See, I remember in early 2000s when I think it was first term of Bush Jr., and the situation was that the debt of the United States was just few $1 trillion in low single digits. And but it was alarming at the time. And Warren Buffett was asked the question, what's happened? Is it possible that under more debts issued, that U.S. can go bankrupt? And Warren Buffett replied, how the only country in the world that can print US dollars, how this country can go bankrupt? It's just physically impossible. And I think at that point, he was right. But today, when US debt approaching $30 trillion, it's an unheard of figure, and even as rich and diverse US as it is, I'm not so sure I don't understand even the mechanism. Nobody even suggests what may happen or might happen that US will ever not even repay the $30 trillion, but even to decrease it substantially. I just, maybe somebody will tell me the scenario.
Look,
Maybe
I
it
think
exists.
I think from an economics perspective on the US debt levels, yeah, it is high. There are other countries that have higher debts as a percentage of the GDP than what the US has. But there's a couple of things that I'll just make a comment thereon. Personally, I've always hated being told something's impossible. So when I was studying economics and stuff like that, they've always said, well, the US dollar is risk-free, or US debt is risk-free. And I'm like, what do you mean it's risk-free? Like, what if something went wrong? You know, like it doesn't make sense to me that it could be risk-free. But more to the point, yeah, the US can, of course, print unlimited amounts of US dollars that will inflate their currency and devalue it. But so too can every other country, can't they? I mean, if Lynn, who's just left us now, I've said his name,
Yeah.
if Lynn was to list his company on the stock exchange and then keep issuing shares and keep issuing shares and keep issuing shares, it would dilute the value of those shares. That's the same thing that happened with the US dollar. Now, in relation to their debt, I actually don't think it's realistic that they'll pay it off. What I think would be realistic is if they put a cap on their expenditure and allow over 50 years or 100 years or something like that for inflation to take care of the debt so that the debt becomes much smaller as a percentage of their GDP. But the other thing is that people talk a lot about GDP, and back in the day, before I was alive, they talked a lot about GNP. Whichever one of those metrics you want to use, or some of the others. The GDP of a country is not actually the country's net worth, right? That's how much income it's got. And to make that sort of simple for the viewers who are watching, I might earn $100,000 a year, but I might have $10 million in assets. I might have bought a whole heap of property and the property prices have gone up. So when you actually look at a country, any country, it's not just how much they're earning, it's also what is that country worth? So what is it worth if we were to buy the United States, for example? I know the United States is not for sale, but if we just try and pretend it was. If we were to buy all the stocks in the S&P 500, I think that's around the 30 trillion mark, right? If we were to buy the Russell 2000, it's probably a higher figure. What about all the roads? What about all the infrastructure? What about every house that exists in the United States? So the actual value of the country is much higher than what the GDP is. So look, the debt is very high as a percentage of GDP. The fact that the debt is more than what the GDP of the country is of course a problem, and that's something that they do need to deal with in the United States. Our debt levels in Australia were already higher than what we would have liked. They're not as high as the US as a percentage of our GDP, but they were high, and they're getting higher obviously because of COVID. But all of those things, I think you have to factor into the equation. And to get back to your other question there about what happens when countries start to cross their currencies directly. The problem with that is when countries cross their currencies directly, they're not transacting it through the US either. So even if that money only momentarily sits in the US economy, it sits there for that brief period of time. So not having international trade go through the United States is going to substantially change, I think, the way the US is. And if the US wasn't the world's reserve currency, I'd be very fearful for two things. One, what will replace it, and what that will mean for the economy of the US.
Have you ever heard about gold?
I do have a question.
Yes, please.
Well, Sasha, can I ask a question before we get into gold?
Please do.
Okay. My observation has been that this country has gone through periods of isolationism before, and it's currently going through one now where we're thinking of America only, not America first. And I think the answer is a global answer. And we need to, just as with the pandemic, it is a global pandemic. And so our economic systems are now intertwined and intermingled in such a way that we cannot think of just America, just Euro, just the pound. We must think globally about these things. And when I want to go back to the idea of leadership, leadership means a lot more than just the economic value is, because it comes down to trust. when we broke out of the Iranian deal, when we broke out of the Paris Accords, and when we started to weaken NATO, not so much by the argument that Germany needs to pay its fair share, but that NATO no longer believes that we will intervene, that we will back up the agreements that we made. No one trusts us anymore internationally. And when that trust is broken, everything is broken. So this is having an economic impact on America as well.
Agree. You wanted to ask a question, Jim, did you? Or you just wanted to...
I think I just wanted to opine.
Oh.
I think what you're saying there, Jim, is absolutely correct. And I'm not trying to be partisan here. I'm just making a comment. Under the Obama administration, he was very, very hard or annoyed, shall I say, at American companies and American people offshoring their money and using offshore tax shelters.
They still
now,
do.
when the Panama Papers came out, or the Paradise Papers came out, that was a concern not just to the US. I mean, you guys probably only saw it, from the US perspective, but there was a heap of very wealthy people in Australia that were caught in that net, and their names were publicised and all that sort of stuff. So, it was a problem here as well. So every country was like, hey, we've really got to do something about it. And that's why, again, on Economics Monday, I talk about, we need to get a broader tax base in all of our countries, but we also need to start making sure that we have some international agreements on how taxation should work. So we're not having, price transferring and double Dutch Irish sandwiches and all that sort of stuff. We need to do something about that. Absolutely, we need to do something about that. But I think that some of that consists of making sure that wealthy people don't feel as though they've got a tax system that is punitive against them. But leaving that aside for a moment, when Obama tried to deal with that, there was two things that he did. One, he offered, and please don't quote me on this because I might have these figures slightly incorrect, but I believe he offered something like a 5% repatriation rate, which was if you were a company and you had money overseas, you could bring it back to Australia, not to Australia, we would have liked it, to the United States, and you only pay 5% tax on it. And the idea was that it would boost the economy, and it didn't. It just went out into executive pay, according to the media, which I'm not disagreeing with on that. The second thing that he did, I think, caused a lot of damage. If any of you guys, other than Sasha, were to try to go to any country in Europe or really most countries around the world and try to open a bank account, good luck. Because they will ask you to declare whether you're a US citizen or a US resident, green card holder, taxable in the US in any way. And if you are, they don't want to know you. And that's simply because the regulations on US citizens for foreign banks and for foreign financial institutions are so onerous, they just don't want to comply with it. And I think that does damage to Americans investing overseas. The problem with Americans investing overseas being curtailed is that if I'm sitting here in Australia, and I'm not a tax resident here anymore, or I shouldn't be anyway. If I'm sitting here in Australia and I am tax resident here, and I'm earning money because I'm buying and selling shares elsewhere, I'm buying and selling property in other countries, those profits are generally, especially capital gains, are generally not taxable in the country that I generated the income or the gain. It's taxable back in Australia at my marginal rate of taxation. What that means is that my country gets to have that foreign income come into it and goes into that country's treasury. If the US has created rules which makes it more difficult for US citizens to invest overseas, what that means is it really hurts the United States. It hurts the United States even more than it hurts the other countries because the US doesn't get to have that foreign income. What could be greater than the US coming over to Australia like they did after September 11? The Australian dollar was only 40 cents against the US, and a heap of US money came in and bought Australian assets, and then they sold them and they made that big capital gain, repatriated the money to the United States, and the United States got Australian dollars into its treasury. So if you curtail that, that's a problem. Now, I'm not blaming Obama for that. I'm not saying Obama was terrible for having done that, because it was something that George Bush was trying to do as well. It's been an ongoing issue. It just happened to be something that happened under his administration.
Well, Shaquille, we could lose the forest for the trees if we want to talk about policy. In this policy in this administration versus this policy in that administration. The idea is that I'm trying to express is that Obama around the world was trusted, and people trusted him that if he said he was going to do something for them, he would do it. And that trust is evaporated. We are no longer trusted around the world to keep our word. So this is the fundamental thing that's going wrong around the world, is the lack of trust. And that's what needs to be restored. And then we can argue about policies.
Yeah, and I think that's an interesting point, Jim, because this is the first time since I've been alive that either a Republican or a Democrat president isn't really likable, right? Like Donald Trump might come out and say all these things. You might go, okay, well, he just speaks badly or whatever. And I know that from my conversation with Australians, they'll say, well, it doesn't matter what the person says, look at what they do. But that's all besides the point. If you look at your last handful of presidents, right? If you look at Obama, he was likable, he was charismatic, he was charming, all the rest of it. George Bush, he was a bit goofy. He would screw up his
beer with him.
Kind of fun, and we liked him. Bill Clinton, very, very charismatic guy. Now we're going a little bit before my time, but even if you talk about someone like Ronald Reagan, you talk about even George H.W. Bush wasn't quite as charismatic, but Ronald Reagan, very funny guy, used to tell jokes about himself, used to tell jokes especially about Russia. We had some very, very charismatic leaders, but Donald Trump, whether you agree or don't agree with him, he's not particularly charismatic. He's quite forceful, and he's quite sort of, well, this way we're going to do things, and that doesn't resonate with people. Some of the things that he says and some of the policies he has might resonate with people, especially if it's a protest vote or they're frustrated with politics, which is why I think he won in 2016.
Correct.
But he's not a charming, hey, I'd love to hang out with that guy. Other than Donald Trump, if you list your last 6 presidents, there is not one of them that I would say, hey, I wouldn't like to go to their house and have dinner with them and have a chat with them. Whereas with Donald Trump, not so much. Now, I say that where it's fairly clear that I kind of like some of the policies he has, not all of them, but some of them. And I've said previously that as an Australian, I think he might win on policy issues, and also because of COVID. I think that a lot of the time when you have dramatic situations, the electorate or the constituency tends to just vote for what's already there rather than changing things. I might be wrong about that, and we'll find out in November. But in Australia, it's not so much about personality. We'll sometimes vote for someone we don't like just because we think their policies are better. But this is an interesting scenario, and because it's not our country, from a foreign perspective, it's not our country. We are so much more focused on policy rather than anything else that a political leader is doing.
And what's happened if, as a result of your policies, which are, for most part, as you said, are very positive, well over 170,000 Americans are being killed? What's happened in this case?
Well, if you're asking me that question, Sasha?
Absolutely.
Well, okay, and I'm look again from a personal perspective. Of course, I care about that, right? From a personal perspective, because the United States is one of my favorite countries, and I adore the place and I adore the people, and I've never had a bad experience there. I love the place. So I don't mean to say it like this, but I'm not American. So what difference does it make if Americans are dying? I'm not trying to say that like I don't care. Personally, I care. But as an investor, what difference does that really make? All I'm going to look at is what economic difference is that going to make if I'm trading the markets? Or, for example, the United States has especially amongst the OECD countries, has the highest murder rate in OECD countries. Now, we all know that, do I sit there and say, oh, that's terrible, it's horrible, blah, blah. Yeah, it's terrible, it's horrible, and I feel really bad for Americans, and I really hope that the murder rate, gets reduced, and, that they have better health care and all that sort of stuff. I say that as a human being with a beating heart. But if I'm looking at where I'm going to invest, those issues aren't really an issue when it comes to me trying to determine whether the US economy is going to do better or worse than another economy. That doesn't really agree with it.
I understand what you're saying, but Trump's policy decisions did not affect the murder rates. Trump's policy decisions did affect the death rates of COVID.
Now, Jim, you guys obviously get more media coverage of the issues, right? We see snippets of it. So I can sit here and tell you that in Western Australia, which is it's a very, very big state. In land geography, it's the biggest state in Australia. It's the state that I'm from, okay?
Right.
We have a Labor Party premier of that state. That's the equivalent of one of your governors. We have a Labor Party premier, and I'm not generally a partisan, but there's a couple of things that I have issues with the Labor Party. However, that Labor Party person closed the borders to the rest of Australia. He was sued by a billionaire in Australia, and this is big news in Australia because it went to our federal court and it's going to be challenged now in the High Court. And I actually hope that the West Australian government wins. Now, some of the things that they've done I don't agree with, but I do hope that they win. That's bigger news to us than what's happening in the United States. So when we hear your news, we're hearing snippets of things. So we'll hear things like, well, Governor Como and Governor Newsom have made all these terrible decisions, and they sent, the elderly back to nursing homes and all this sort of stuff. That's what we're hearing. And the fact of the matter is that we may care, we may not, right? But we care as people because we're your allies. Other than the time that you had a crack at Canada, we have fought in every single war and every single battle that the United States has had since Australia's federation. Okay, we weren't acknowledged that a couple of times, which we should have been, but we've actually been there alongside you every single time.
Absolutely.
You're our allies. We love you guys. We want you guys to do really well. Okay. But when it comes to those sort of political issues, or whether, was Donald Trump to blame? Were the Democrats to blame? Was it this? Was it that? The reality is that, most especially over the last 4 years, politics in your country has been dysfunctional. Everybody's been fighting. And it looks to us in Australia very much like what we've had in Australia, which is dysfunctional politics where people are arguing for the sake of politics. So from an Australian perspective, we just tune out and go, we don't care. That makes no difference because it's impossible for us to decipher from Australia.
We can argue this for hours. Bill, I'd like to let you chime in.
Okay, well, I wasn't necessarily going to chime in on that particular point. I wanted to raise another point, and that is, Sasha, if the number one rule is preservation of your assets, and at least in the short term, we have all of this uncertainty around the world and direction of various countries, because it's all going to be dependent, and we really don't know. We're in kind of a unique space. You had mentioned gold. I mean, what if gold is a commodity, but is it just gold that people should go to? Or are there other commodities that you would see that would retain the value during this unsettled time to then, when things are clearer, for investors to come back? I'm curious about that. And whether it's just gold or could it be silver or some other commodities?
Okay, it's an old saying that silver is a poor man's gold.
Okay.
However, it's a joke. I think that silver has also potential, same as gold, and silver also is used in industrial production and so on. So it's slightly different. However, they're all quite tied together, and if gold goes up, so is silver in most cases. So I'm talking about gold because it's the most understood commodity because it has a monetary value. And it is in a complete contradiction to US dollars. So gold may not even go higher in its price, but as long as US dollar would go for whatever reason slower, gold automatically goes higher. It's not that something happened with the fundamentals such as supply and demand on gold or anything like that. It's just automatic. US dollar goes down, gold goes up. It's just it's been like that for the last couple of 100 years, and I don't think that this time it will be different. About gold or gold assets, I personally always participating in a gold stocks, high quality gold stocks, whether it's Barrick Gold, symbol gold, or Newmont Corporation, symbol NEM. And in most times, I'm not even buying these stocks. I'm just selling puts. And if I'm exercised, I keep the premium. And if not, then acquiring stock at slightly lower prices. That's probably would answer my
Well,
question.
Yeah,
Sasha,
you had a question to me earlier, and I couldn't answer it. I wanted Sasha to answer it, and it was about people who could trade puts and sells, even if they don't have a lot of money. And could you ask that question to Sasha that you were talking to me about? You were watching something on TikTok, if I'm not correct.
Oh yeah, I'm familiar with that. Yes.
Yes, I was saying that online on TikTok, there's a whole new number of sleuths of people trying to educate on trading now. And all the trading's advice are, guess what? Based on what Sasha teaches, options. Everybody is trying to teach everybody else how to do options. And they start off with selling big numbers, big stocks, and then now they're going small. The problem with going small is, of course, one, you don't have a minimum enough to trade in, because I think a lot of the applications out there require a minimum of 5 to 10K in your account to trade with. So now they're banking on the 100, 500,000 mark. So they use this technique where they both buy and sell the same thing. So, Sasha?
The old saying is a joke. A woman was asked how to make your husband a millionaire. She answers, to marry a billionaire. So I think all these traders with the small accounts, they were started with the large accounts, and
Yes.
now their accounts became small accounts, and very soon they will become even micro accounts, and then they will be trading lots of, I don't know, $25 or so. I don't know what else they're gonna do. Remember, number one, yes, I was saying a lot about options. Number two, I was always saying sell options, not to buy. In certain situations, like Shaquille would probably help me to indicate, you may buy options, but there must be a reason, a very special reason why you are doing that. If all these little TikTok people just buying options, their small accounts will become micro accounts very soon. Trust me.
Yes, but they buy and they sell the same stock.
Okay. Yes, I've seen this TikTok video or something. You see, what they don't take into account is that first of all, there are huge spreads between bid and ask on options, and you're talking about 4 times you're going to lose. 2 times when you're buying option and selling options. And when you liquidate your position, you will again lose on spread both times. Then depends on the brokerage accounts. There is something what they call commissions. When you are buying or selling, there are commissions. Regardless whether you make money or lose money, there are commissions. So your trade is losing as a preposition right away. It doesn't even matter which way the trade will go, your way or Shaquille's way or my way. It doesn't matter. You are already a loser just by initiating the trade. That's all what I have to say. Shaquille, any thoughts on that?
Yeah, I'll just say this, and especially for viewers who are, who are new to this. One thing that I'll say for people starting out is that when they get into options, they often think, okay, look, if I was to, generally speaking, an option represents 100 shares. So if I'm looking at 100 shares of Microsoft right now, 100 shares of Microsoft at $215 a share, roughly, that's $21,500, right? If I can buy an option for that on that stock, and I control 100 shares, but it's only going to cost me $1. That's $1 by the 100. So I'm looking at $1,000. Cool.
Really, Shaquille,
No
I can't restrain myself, but just today I sold Microsoft calls, and I've collecting $20 per call, and it's just October call. So for lousy 2 months, I'm paid for each call $2,000. Where is $1 a call? Where did you take that?
I'm just using this as an example.
Okay, I also gave it as an example. That's it.
To answer your question, just in case I don't know the options market too well.
Okay.
It's a Wednesday, so we might be talking about weekly options that expire on Friday, for example. But the point that I'd like to make is that people often look at that and go, okay, well, the amount of money that I actually have to pay for the option versus how much it would cost me to buy the stock is quite low. And what they do is they tend to over leverage their account because they tend to try and take a whole heap of positions at the same time. And they don't realize that, you might spend $20,000 and you've got an account value of $20,000, but the positions that you're holding have a notional value of $400,000. So you're leveraged really high. And what happens is if you make a profit, hey, you make great explosive profits and it's amazing. But if you make a loss, you make an incredible loss as well. You could blow 100% of your account. And back in the cowboy days of the FX markets, there were FX brokers that were offering like 1,000 to 1 leverage, which is just ridiculous. 1 pip, you've blown your account.
You're talking about bucket shops where Jesse Livermore was starting his career. Remember? If you read the book about him.
Well, I remember reading the book. I don't remember when Jesse Livermore was around, but certainly to read was Memoirs of a Stock Trader by Jesse Livermore, and he talks a lot about how that happened, sort of at old gambling venues and that sort of thing. But I'd like to ask Bill a quick question, if I may. So you are our famous DC correspondent, loving politics. I'd love to know why you decided that was a good idea for your life to study politics, but we'll get into that another time, Bill. The question I have for you is this. When it comes to economic policies, this is a different time right now because of COVID, which is not just affecting the United States, it's affecting everywhere in the world. So everyone's dealing with it. From the economic policies that you've observed, because I haven't observed them from either party, what do you think the Democrats are suggesting that they're going to do as far as economics is concerned and as far as what effect that'll have on the economy? And the same question as well, if the Republicans win, what are their plans for the economy and what is the difference between the two? Could you let us know?
I'm quite clear in terms of what I think will happen with the two administrations. Now, again, this is just looking forward, and like a weather person, I could be wrong, but I don't think so in this case. I think if Biden wins, he's going to be looking at a fiscal policy on the scale of FDR. That's what he's looking to do, because when you start talking about infrastructure, both physical as well as technology, as well as the Green Deal, which I know he is committed to, even though a lot of people go back and forth on that. And it really will lead eventually to an expansion of jobs. There has to be upfront money, and he's going to do that. And that's going to be expensive all on its own. Then when we look to the area of the economy, most importantly, the healthcare and the medical side, that's going to be expensive in terms of getting it under control and putting it together. So there's no other way around. Those two alone are going to require sustained expansionary fiscal policy. That I have no doubt. And I guess the way our audience should think about it historically, because maybe they don't know FDR and things of that nature. One of the things that FDR did during the Great Depression in order to come out of it was he just set up public work programs and just put people to work to pump money into the economy while at the same time pumping building up the infrastructure. Now, he did that through governmental means. I think now what Biden is going to do, or I expect him to do, is to use that same expansionary fiscal policy in a public-private type of leverage, meaning the government comes in and says, okay, private company, we've got to repair these roads and these bridges. And that will get people together rather than the government setting up like the Works Program Administration, which they did before. But when you start looking at all of the areas of the economy, and I'm just talking about the big items, I'm not even talking about getting down into the weeds with the proposal of, a guaranteed basic income, which is floating out there because the vice presidential nominee, Senator Harris, had proposed a $2,000 a month payment to everybody in America until this pandemic is over. So I know that idea is floating out there, but that's smaller on the scale. For purposes of the investors, if it's a Democratic administration, you can expect the expansionary monetary policy to continue, combined with a significant, and when I say significant, I know that we've pumped about $3 trillion. I think it was $1 trillion with the first bill, $2 trillion, and now maybe they're talking another $2 trillion in the upcoming bill if they ever get to it. However, I'm talking the size and scope that might be 30 to 40% of what we've been thinking about right now, because that's what it's going to take in terms of an infusion. And I'm not, and the Democrats at this point are not going to be concerned about the deficit or the debt, because quite frankly, the ratio of the debt ratio, there's a great deal of room in the United States, budget to sustain and support that kind of expansionary fiscal policy. That will stabilize. Investors will know which direction we're going in. They'll know which companies to invest in. Any of the green technologies, any of the medical technologies, things of that nature, and that kind of area, or in any of the infrastructure things, because they're going to need concrete, they're going to need oil, they're going to need things, and steel, etc. So that will stabilize the investors. It'll put people back to work, and we're talking at that level. Now, on the other hand, I am quite clear that we don't know if it's a Trump administration. I know it sounds funny. Quite frankly, it's scary for me, because what ends up happening is that people run to protect their assets, which they should do because they're acting in their best interest. And when they pull all the cards off the table. And just to tie into the point that you had made earlier about the repatriation of offshore earnings by American companies, you're right. They did declare a holiday and said, come in. And there was an argument over whether it was going to be a 20% or 18%, but I think they settled ultimately on 15%. And they thought with all that money coming back, that the companies would reinvest and hire people with that one-time bonus and savings. So there was a one-time hit or profit to the American Treasury because we got taxes, not at the level we should have, but we got some money from the repatriations. So that was helpful. But we also thought the private sector would invest in businesses. Now, some companies did, but many companies didn't. Most significantly, you can look to the example of Apple. Apple took all that money and just kept it in cash, and they just put it away. They are sitting something like on like $4 billion of cash, and they have
bought their own stock back.
That's right. And so a lot of companies did that. So there's a lot of money now sitting in the United States that is unused. And the question becomes, even if we have the expansionary monetary policy and we have a sustained expansionary fiscal policy focused in the big areas, healthcare, green initiatives, infrastructure, even if we have that, the question becomes, is that going to be enough to incentivize the private sector that is sitting on all of this cash to then start to come back into the economy? And I suspect the answer would be yes, if they had a stable direction and they could plan. I think the answer would be yes. If, on the other hand, it's a Trump administration, I really don't know. And that's going to be scary because the companies will continue to sit on their cash and investors will continue to flee to the safest areas, maybe gold, okay? And it'll be hard to jumpstart because the international community, again, is not going to trust Trump. And what we would expect from Trump, given that, and this is pure speculation, but I tend to take them at their word at the Republican National Convention. When Senator Rand Paul said unequivocally that the U.S. was going to pull back all troops out of combat areas across the globe and that the U.S. was going to pull out all foreign aid, I tend to take them at their word. But that is a destabilizing effect on the rest of the world. And that destabilization, because we don't know. First, raising the question is destabilizing. But if they were to do it under a second term of the Trump administration, that would destabilize the global economic community because everybody would not know. And that leads to
chaos.
But Jim, I mean,
so Bill, just on that though, if US taxpayers are paying to stabilize the world's economy, presumably, again, I say that as a foreigner or an alien, as you guys would call me, if US taxpayers are funding the stabilization of the rest of the world, and the US is the world's super police force, is there an argument there that pulling out of those things that cost US taxpayers money is going to be better for the domestic economy of the US? But more important than that question would be this. I actually haven't really seen, I was a little bit disappointed because I was expecting to see a little bit more out of the RNC footage that I have seen. What economic policy has actually been espoused by the Republicans at the RNC? What has actually been said by Donald Trump and everybody else? And I know that Jim is sitting there saying that. And again, I don't actually know. And again, looking at from the other side of the world, I actually don't know what the Democrats have said either. From our perspective here in Australia, this is how we perceive your politics, right? And the RNC has kind of just made a lot of us go, oh my goodness, what's going to happen? Because this is how we view it. We view it that the Democrats' whole platform is, we're not Trump. And Trump has come out.
Yeah, that's because you're listening to Murdoch.
Actually, that's...
No, hang on, just let me finish. This is how we're observing it. The Democrats have come out and said, we're not Trump. That's why we're great, because we're not Trump. And at the RNC, Trump has come out, and we were really, like, everybody I know was like, oh, we're expecting some policy. Trump has come out and gone, I'm Trump. That's how we perceive it. It's that black and white. I'm not Trump. I am Trump. That is what we see as being U.S. politics right now.
Shaq, I'm going to defer to Bill, but I first want to say that wherever you and I go, we're aliens, whatever country we're in.
I'm an English alien. I'm an Englishman in New York. Well, what I can tell you is that the RNC did vote on a platform of policies. And let me tell you what it contained. Nothing. They officially have no platform. And they voted that they voted on it. So they got the delegates together and they said, what are the proposals, measures, and everything else? And the delegates said, we have none, because that's what Trump wanted. So that it leaves it freewheeling. It could change at any minute and everything else. So I'm not sure what Murdoch is pumping into Australia, but there are no economic policies for Trump. Now, on the other side,
just because Murdoch's Australian doesn't mean that he's the only media that we get. Can I just say that?
Okay.
Harry owns Channel 7. He's a leftist. I've met the man many times. Just putting that out there.
Okay. No, fair enough. But on the other side, the Biden campaign and the Democrats have been attacked because of their policies. The Green New Deal, infrastructure, they're looking at tax cuts for the middle class, and they are looking at raising taxes on the highest income earners in order to pay for what they see they're going to have to do. So the Democrats are looking at, and their platform talks about taxing the highest income, increasing that, and then using that money to then offer a tax cut to the middle class, and then invest in all of these other areas for the long-term future. And
Bill, do you remember what Mike Bloomberg said on the convention? That
Yeah.
he doesn't need this tax cuts that he's got. He had more than enough money. He's 78 years old or so. He has his worth is $67 billion. Why does he need these tax cuts?
Right, and actually that was his point, and that was also the point of a number of other influential
Yeah.
people, like Bill Gates and even Warren Buffett. So they're okay with that highest tax rate, which is then going to produce some of the revenue that we're going to need to fund the really significant expansionary fiscal policy. But it's not going to be enough, and that fiscal policy is then going to have to be an expansion of the debt. But on the other side, the Trump administration, it's going to be like the wild, wild west. Everybody's just going to run for safety. Other countries, naturally, through self-preservation, are going to start making their own deals and looking at the world through, just being a series of tribes. And that is really scary because it undermines almost, Sasha, how long? Because it would be Bretton Woods. I mean, it would be longer than that. How long it took us to put together the global thing. Sasha, because right now in 3.5 years, he has totally destroyed the very foundations of what it took decades to build. Sasha and Jim?
Okay, let me address that. Of course, Bretton Woods is a key convention that put international system in place as it exists today, or at least until 2016.
That's right.
Now, let me address something. If Trump is right and America first or America only, in fact, everybody is taking a view that, yes, Trump is right, go ahead full speed and just do it. Okay, so Trump takes all the troops from all over the world back in US. I'm not sure where is it going to be where is it going to live in the United States? There are no jobs available. There are no infrastructure anyway. Okay, but okay, he'll take care of that. So all the troops are now back in US. All America is already terminated all the international agreements and many others, and Paris Accord. So America is out of any trade deals, any trade agreements anywhere in the world. So America now sustains its own economy the best it can. It manufactures something. There is no place to sell actually whatever U.S. manufactures, but nobody will deal with U.S., which is not participating in any world deals, or actually it has to leave WTO or the World Trade Organization and many others. So let's accomplish that as well. So America is needed only by Americans, and they are going to stagnate very quickly in
Right.
10 to 15 years. It will go just bankrupt, really, because nobody.
It's a very brave view, Sasha.
There is very important thing. All U.S. economy is based on U.S. dollar as a currency of the last resort. So if you will take with America first, America only, no trade deals, no dealing with anybody, no troops around the globe, anybody is doing whatever they want to do, America is out of everything. Nobody needs U.S. dollars either, because of course everybody will go to China and they will start trading with China. China will be very happy. China, I don't remember the last out of the 30 or so trillions of dollars, how much China holds. China holds probably 20 to 25% of that. So China will say, who needs its US dollar anymore? We don't need that. Okay, just give us the money or whatever you have. Oh, do you have gold? Oh, you don't have gold. What do you have? You know what? Just declare yourself bankrupt because you cannot pay it. So the consequences are horrible. It's demise of America, really.
Sasha, I don't like to draw a correlation between China and the United States because although China is arguably the second largest economy in the world, they still classify themselves, and the international community still classifies them as being an emerging market.
Yeah.
They're still taking, massive amounts of money from the IMF. Here's the places that I think will be very interesting to watch. The UK definitely post-Brexit, because the UK has been through a lot of stuff in its time. I think the UK will be very, very interesting to see. The EU will be very interesting to see whether it even stays together. And India, of course, has got a population roughly similar to the size of China. Very interesting to see how they perform. But again, when it comes to the international perspective, and again, I mentioned this on Economics Monday, very interesting to see because whilst the trade war is going on with China, Australia, who exports a lot of its agricultural and mineral resources to China, has seen a slowdown in its economy because of the trade war with the US, and because during coronavirus and other times, Australia has kind of made some negative comments about China. That's hurt us with our exports. We would love to strengthen our trade deals and our relationships with the United States, as too would New Zealand, presumably. The UK and the US wants to strengthen their rules. Now, if you look at Boris Johnson, he's very much on the right, and he's on the far right. I think in any other time, he would stand no chance of winning the UK election, but he did by a landslide. Him and Nigel Farage and Donald Trump are obviously great friends, right? So the international community amongst Western countries, allies, the Five Eyes countries, they are very, very much, I think, sitting centre right with the exception of Canada. And I think that's going to have some effect on the US economy and especially on US political results coming into this, which I think Americans looking only within America, they may not see how some of the rest of the world is viewing things.
Okay, may I say something important? Something important is that our show runs now for well over an hour and a half. Number two, I would like to ask your opinion if we should have a second show starting next week, to have one that we have now, but to have also another day, I don't know, maybe Friday, maybe something else, because we are expanding far above investing. We are talking about international politics, and it's all together. We cannot separate investment from politics, right? If you agree with me, I will definitely ask to add maybe Friday, if you don't mind, and to have maybe Wednesday, we will have more concentration on the investment as we did before, and on Friday on politics and investment, how they affect each other. And finally, speaking about our younger, not so experienced investors, what I can say. Number one, you definitely need some startup capital to start. You need that. Without that, it's just you can go only daydream and nothing more than that. But even if you don't have that, but you're building up that on a way to time when you will build up, try to become a specialist on a just handful of stocks. Let's say 4 or 5 stocks, no more than that. I would recommend one gold stock. Take gold, Barrick Gold, because it's cheaper than Newmount. I like Newmount more, but it's more expensive stock either. And also, a Barrick is a little bit more volatile on the way up, and same as the way down, unfortunately. So try Barrick, and then look also at Newmount. It's it's more solid. There are several reasons. I don't want to expand on it now. Why Newmount is a better company, but gold, Barrick is just almost as good. Number two, take a look at TZA, because once the collapse, which is imminent, it's a matter of 2, 4 weeks, 8 weeks, 12 weeks. It's imminent. It's there. It's 15 to 20% downturn. Anyway, you look at it, it's coming. And TZA will be extremely important. It's moving up even when the market and everything is jumps 20% in 2 hours. Look at TZA, Russell 2000 is already crumbling. Look also, you have to take one of those big stocks. Like I personally like NVIDIA. Take a look at NVIDIA. Of course, Netflix is fundamentally good, jump to date over 10%. Um, Apple, Apple only because it's going to be split, so there is some upside, but it's tremendously risky, same as Tesla. And, I would be scared of the stocks, although you can make money here and there on spreads or so on, but it's expensive stock. So, but Nvidia also expensive, Netflix too. But at least take a look at one of those stocks. Gold stocks, TZA, and as the industrials, mm, I hate to say General Motors. I think that General Motors may become a takeover target. That's all. And you know who can buy General Motors? Tesla. Tesla will acquire a huge amount of dealerships all over the world, and they will start selling its electric cars. But not now. It's going to happen probably.
That won't be
What?
popular. I can tell you now, General Motors will not be popular in Australia, but that's a conversation for another
Yes.
time.
Yes. Okay, on that, I would like to say thank you so much to all of you as the contributors. Looking forward to next Wednesday, and hopefully we will end up another show next week. Thank you very much to all. Bye-bye.